Good morning, traders, and welcome back to a Friday episode of Market in the Morning. I'm your host, Kevin Dubrisky. It is 7:31, the last day of July. Can you believe we're already through July already? It's going to be August the next time I see you guys, and I hope you guys have a great weekend. But today, we have some charts to break down. Markets are starting to reverse. We're seeing the bullish momentum step back in, and I bet a lot of you are wondering why. And today we're going to answer that. We're going to break it down. Where's this market optimism coming from? How you can trade it, give you some actionable insights as well. And we will be bringing on Nalab too. So guys, smash that like button. Market in the Morning starts right now. So we of course have to start on our beautiful Market AI terminal to go over what's going on in markets. And we will be asking market why we're bullish. So let's take a quick look and see if it answers it beforehand. S&P futures hold gains as Gaza disarmament offsets high U.S. yields. What's up, Piyush? Good morning, brother. How are you? Guys, drop a good morning in the chat. Drop a hello. Tell me what's going on. What are you trading today? So S&P 500. We'll cover S&P and NASDAQ first. I know it's a bit of a rough start. Usually Fridays are a little slower on the market side, so we'll take a look. We'll see what's going on, and then we'll cover gold when more people come in here. Beth, good morning. How are you? You on those funded accounts today after you pass those evals? Let's go. Let's go. Jesse, good morning. How are you guys? I hope you guys are ready for a phenomenal trading day. We got some great setups coming up at you. And yeah, I hope you guys are excited. So S&P 500, we are bullish, slight reversal risk. What supports the bias? Hormuz and LNG safe passage progress eases worst case energy supply fears. So that's great. It's easing supply fears. That's a good sign for buyers. Well, yes and no. We'll see. We'll break it down. Microsoft's AI earnings surge drives heavy inflows into U.S. megatech. Now, this is the main meat and potatoes of why this move is actually starting to occur with strength. So if we take a look, risk on bias dominates as Microsoft AI-fueled earnings beat validates the profitability of heavy AI capex. I've been telling you guys since last earnings report, even the earnings report before that, that heavy capex is keeping the market concerned. It's adding uncertainty. So what was going on? We were seeing more selling pressure. NASDAQ was down as much as 12% from those all-time highs. Now we had Microsoft and Amazon come out and said, hey, listen, yeah, we're spending more on capex, but our cloud services are up 30 to 40% in that revenue. So that's a huge driver of what's supporting the NASDAQ and S&P 500 today. So guys, without further ado, we are going to bring on the one, the only Mr. Nalab. What is going on, brother?
Good morning, Kevin. Good Friday, man.
Good morning. How are you?
I'm doing well, man. How are you? How's your week?
It's going good. It's going good. I feel like it's been a long week, but we're here.
Yeah, it's definitely been probably one of the longest weeks ever this year.
Oh, right. It's been one of those weeks this week. Yeah. I don't know.
It has a lot going on. So it just, adds to the longevity of the week, and it makes it feel like it's gonna go forever. But good thing it's a weekend. Take some time to relax if you're a normal person on the weekend. But if you're an animal like me, you're working all day long, every day. Yeah. No, but it's good to be here. Let's end it off on a banger session for the week. We had major catalyst this week, FOMC, which brought exact repricing into the markets that we were expecting, right?
Yep.
We talked about this for a while, that we were going to see those bulls on U.S. equities, NQ, ES, gold. But we know gold is in a bit more of a balanced range. And this is where we have to be a bit more patient with these buy plays, because right now you can see we recently did our update to our bias section, and we're still coming up with more and more updates for it. So it's going to be, as you can see, gold has been in a large balanced range for about a month and a half now, right? About a month and a half, gold since the last FOMC has entered into this balanced range, and we have just been taking buys and sells. But this is where it's hard to determine a one-sided direction because of this range and everything that's going on macroeconomic and geopolitically sentiment-wise. Okay, so what you can do is click here. Why is this a bullish with a possible reversal risk, right? Because we had sentiment that was holding markets bullish, such as Fed holds rates, markets price out further US hikes. But we have oil driven inflation concerns and still the risk over there that are still keeping that Fed hike risk alive, right? It's still a part of the FOMC probabilities for later in the year that the Fed ends up hiking. Although they may not be true, but the point is the market is still pricing that in. So when you see a move like this, that got retraced, large portion of the PCE move has been taken out. But the point being is that we just had two pieces of sentiment, two pieces of data that pointed towards bullish gold. And that's what we got. We got the bullish gold on FOMC because of the hold that they had. Gold surged after Fed held rates steady, pressuring real yields and the dollar. Say that 10 times fast. Real yields. It's a hard thing to say, man. Oh man, I'm gonna do a day in the life soon. I got a YouTube channel coming. I got a vlog coming for that, and a lot of trading content as well. Like my journey, what I went through, how much shit I ate before I became profitable. But so we had this move, then we had PCE come in softer than expected. So that bias remained more on the bullish side because of the current momentum. The market does what the market wants to do. And because we're in a balanced range, we saw that move largely getting down. We're in a part of gold where it's a very tight range. You'll see sentiment often switching if an event happens, because that's what the markets are like. Markets move based on things that are happening right now. And if sentiment shifts from bullish to bearish, that's what happens in a range like this. And you got to be smart enough to understand that we are playing in a very, very tight range. And we've been in this range for largely nearly 2 months now, right? A month and a half. So just knowing this, I know that we're not in a place where the buys from here are going to run exponentially towards the upside. I've always mentioned to you guys, especially when we're in a time period like this, where there's not a one-sided direction in the market yet. And that's because of a few things. That's because the markets are still looking to price out those rate hikes and for inflation to come back down. And for us to get that solid catalyst that the Fed is going to start cutting rates. Now, it's that same solid catalyst that Powell gave at the Jackson Hole Symposium last year, which I like to call the Jackson Hole freestyle. That's what I like to call it. Now, that freestyle brought us mass amounts of movement across global markets and global asset classes. Where over here, you have the Jackson Hole Symposium, and this is 5 weeks after gold sitting 33% higher. Now, if we get a catalyst like this, where do you think gold's going to go? Gold's easily going to go to 4,400 first. But first, it has to break 4,200. Until then, we remain in this balanced range. Just like how we had to break past 3,400. And the catalyst to that was days after Jackson Hole Symposium, when that sentiment was set into place. Now, we had one Fed meeting where they held rates. They still, 3 of them were like, we should have hiked. 3 of them wanted to hike out of the 9. The other 9 said we're data dependent. Now, if inflation continues to come down, just like how Trump says he wants inflation to go down. Now, if inflation starts to go down, what ends up happening to the markets, right? Markets price out rate hikes, right? And then start pricing in rate cuts. And then you have that entire narrative shifting. So Trump says he wants inflation to go down. Okay. Now, if inflation starts to go down, he said he wants that by midterms. By midterms, we'll really remember that report. Do you guys remember that headline? Like, if we go here, I go search Trump inflation, and now look at this. Probably the first 3 headlines are him going to be Trump describes inflation report as amazing. Trump cites inflation report, tells voters to remember it for midterms. But he just knows he's going to bring inflation down. And how is he going to bring inflation down? Because he's going to impact the price of oil. Now, you can see the price of oil has already started fading that move. Exactly how we talked about, that if the price of oil fails to remain higher and push above 95s, 90s, if we start getting that corrective structure and a push towards back down to these lows at 66, 67, that means inflation will also come down. And we don't need inflation to come down. All we need is oil to come down. And the markets are then going to price this in. You get what I mean? Buy the rumor, sell the news. Markets are forward looking. If price of oil comes down, gold is going to start setting up for those buys. And then when you get CPI, guess what? Market participants are already pre-positioned for that report. Just like how we were pre-positioned for the Fed dovish hold, right? We knew the Fed wasn't going to hike. You had Citadel, you had a few other banks come out and say the Fed was going to hike. They came out and said that on Monday and Tuesday. And guess what the Fed didn't do? The Fed didn't hike. All they did was cause mass sell-offs across global markets, and then boom, they're positioned for those buys. So now if I go to ES, look at this beautiful play on ES, how ES completely rebounded off of these lows. Now, is that anything but engineered? No. Look at this engineered move from to the downside from market open. Institutions, whales grab their massive amounts of premium buy price, and guess what ends up happening? Leopold Aschenberger becomes a bag holder, and he gets bought out by the whales. It's a shark eat shark world. All right, it's a dog eat dog world. He was $45 billion under management, 400 times leverage on AI stocks. Ken Griffin said, hey, Fed's looking to hike. Citadel comes up, market swings to the lows. Leopold gets margin called. Ken Griffin comes in, shark eating shark world, man. That's what the financial markets are. That's why I love it. This is pure cinema, guys. The fact that we're able to understand that this push towards the downside is just a move for liquidity. The Fed's going to hold. And this is the kind of conviction I want all of you to have hours before, days before the Fed even comes out and CPI comes out. Because that's how you play the market, is that, yes, we're bullish in this area, but we still have that risk of reversal. And we're getting that because market told you that this is still dominated, that oil-driven inflation expectations keep Fed risks alive despite recent hold. There's always factors working day in, day out, right? But the point being is that we're improving this to the point where it's going to be very, very easy for you to come here and figure this out. And as the markets move, we also realize areas where we need to improve market, where we need to take a step back, reimagine, rethink a few solutions. One thing we realized is that people come out, and especially noobs and low IQ people come out and take this as a direct signal. This is the financial markets. The financial market don't move off signals unless you're the Fed chairman or you're Donald Trump. Nobody else cares about that. Okay, this is market sentiment. And that's what we're going to frame it as, because that's what essentially this is, and it changes. What we are working on is we're reworking our entire sentiment engine. So what you guys will see in the coming weeks is absolute real-time price monitoring, is that you will start seeing your chart being populated by real-time almost things like this, but have a bit more tags on them. And there'll be things that are actually happening, whether like how we had this retracement on FOMC because Trump came out. Trump came out instantly right after they held the rates, and he caused this pullback, and then buyers came back in. But the point being, and even I want to go back to FOMC earlier this week, was that these were the scenarios we mapped out, right? Kevin, you remember these? Right at FOMC, we mapped out these scenarios right about here. Oops, sorry. One more candle. Yeah, right here, we mapped out these scenarios that we were looking for buys towards the downside or here when the rates were being held. We got those buys from here, right? We took these on stream. We called it out. We took profit at the highs and let the runners extend for about 600 pips. And then the second set of buys came the next intraday candle. And I mentioned to you guys, I don't care if gold goes to 40.50. I don't care if it goes to 40.25. I'll be buying in the next daily candle, right? Who remembers me saying that? And I even said, I'm like, dude, if we go back down to 39.75, guess who's going to be buying? It's going to be me. Because I understand that this sort of positioning takes a long time to build. Well, how do I remember this? Because of my incident in 2022. Did I do something bad? No, I didn't do anything bad. I just was an idiot trader, and I didn't realize what was taking place at this bottom and how the markets were starting to price out those rate hikes that were happening all year long. Because inflation was coming down, inflation had come down from 9% and was sitting at around mid 4% over here. And then the market started pricing in those cuts. Don't you think it's the exact same thing happening right here, right now? where we had war risks, oil shocks, inflation risks, higher for longer rates. And now you have war being priced in, potential oil spike is temporary, right? With oil coming down, and we'll see how it reacts going into the next week, whether this happens. Because, guys, it's the same type of thing that happened with Russia, Ukraine as well, right? Where oil doesn't tend to stay above that price handle for too long. Like right here, you get the play towards the upside down, low created at around 450, pull back to higher prices before we fade out the move again. So if this starts getting faded out, markets are going to start pricing in lower oil risks. That means they're going to price in lower inflation, right? And then what comes after lower inflation? They price out hikes, and then they price in cuts. And then all of a sudden you have movement like this that 6 months down the line looks so blatantly obvious, but all it takes is for you to remain focused on what's going on around the world. And that's why we're here, guys. We're not here to sell you a course. We're not here to shill $5,000 out of your retirement. We're here to really show you what it takes to become a profitable trader in the market. And unfortunately, to everybody who doesn't want to hear this, it takes more than just technical analysis. Technical analysis is fantastic, but it is a symbiotic relationship with fundamentals. And that's one thing that Kevin and I always emphasize, is that yes, you can trade technicals. We all have our own way to execute in the financial markets, and that there's no right or wrong. No matter whose ego says they're right, no matter whose ego says they're wrong, there's been times where Kevin's been wrong and I've been right, and I've been right and I've been wrong and Kevin's been right. Point being, we both have had different outlooks on the same market, and that's fine. Yep. Not both of us can win, but both of us can have a very objective outlook on what's actually happening behind the scenes, right? What's happening in the world, what the Fed is doing, what the central bank of the currency you're trading is doing, or the market you're trading is doing. Because the central bank are just like the cartels. They control the flows. They control the supply of the dollar, which we know is the biggest drug in the world, is the US dollar. Everybody runs off of it. Everybody's a slave to it. The entire world is a slave to the debt cycle created by central banks. Now, if we understand central bank movement, this is how we can take advantage and potentially get out of that debt cycle. Now, these are not moves that your mentor or an everyday trader can picture or theorize. These only come from experience in the financial markets for years. Now, I've been trading since 2019, 2018. It's almost been 10 years for me. So I've been trading. I was trading when gold was stuck in this range at 1,200. This was a brutal range. And I remember when I first started trading here, and I was talking to veterans in the market who were trading since 2008, 2010. And they're like, yeah, man, gold's been in here since 2013. And I'm like, what? Gold's been in this range? That's the last time I ever saw that range, guys. Because why? Because Trumpy came out and started the trade war. This move that took gold out of its range that it had been in since 2013. Like, look, we're about to break down the entire thing, okay? This is quantitative easing happening from global financial crisis in 2008, right? So this is Fed starts QE. Low rates, buying asset purchases, right? Fed starts QE, and that's this phase right here, okay? This over here is called the infamous, and this is not a phrase by me, but this is a phrase by the markets. Taper tantrum. This is where the Fed was going through a taper tantrum and hiking rates. So you could see how before they even hiked, the market started topping off because they started tapering their asset purchases. When the Federal Reserve is doing quantitative easing, meaning they're stimulating the economy with low rates and buying mortgage-backed securities and U.S. treasuries as a part of their asset purchase program, that puts liquidity into the financial system. It causes dollar devaluation. So you see gold pushing towards the upside, and all that liquidity ends up right back into U.S. equities. And that's why you also see U.S. equities thriving in a low rate environment, because now it's easier for an everyday individual to go out to the bank, get a $100,000 loan dirt cheap versus it is for them to get it at 5% interest rate, right? So markets know this, markets front run this information. So you have these aggressive plays towards the upside. You go into this balanced range again, and this balanced range here was for was for not 8 years, like 7 years. Okay, but still, this is a long period of time. And then over here, what ends up happening is President Trump comes in. This is Trump versus China tariffs originally right here. This little area right here is Trump versus China. Okay. Now, if I go a little bit into here, I see you're like, Nalab, what is this massive outflow in the markets right over here? Massive sell-off that happened on gold, on US equities, on Bitcoin, and a spike up that happened on dollar. Okay. Well, everything spiked down right until March, end of March, third week of March. Why? Because this is where the Fed steps in. Fed steps in, COVID 2020, cuts rates, starts back, QE, says they will stimulate the economy. And this is the same time. During this time, what was happening was that we had forced lockdowns, engineered lockdowns. The country didn't need to go into a lockdown. Everything was fine. Rest of the world was fine. The country went into a lockdown. The Fed steps in 2020. These are engineered lockdown. The economy is performing as interest rate, unemployment rate had just shot up because of the amount of work, the lockdowns. Okay. Fed steps in, starts quantitative easing, first rate cut, markets start front running the next cut cycle. And then you get this massive push towards the upside and you get this volatility. Okay. And then what happens? Now you go back to here. You're like, okay, we're still quantitative tightening, but we've just had such a parabolic move towards the upside. What's normal? A correction. A correction is normal. During this time, the Fed was still cutting. The Fed was cutting and stimulating the economy. But what started happening was inflation started going up, right? So we became more in a balanced range where Fed wasn't cutting, but the Fed also was still stimulating the economy, that they were done with their cuts, that rates were low. They were still buying about they buy about $120 billion of asset purchases every month, which is $40 billion worth of mortgage-backed securities and $80 billion worth of US treasuries, okay? And that's how the economy gets stimulated. Now, if that starts to get tapered out, what do you think is going to happen? It's going to be the same as how we had in the taper tantrum, where they taper those asset purchases, markets start pricing in those hikes and front running it. But before that took place, we had one more event, which was right here, Russia versus Ukraine. Now, this lasted a mere few weeks because it got priced in quite right away. Now, this was Russia versus Ukraine, and you can backtest this, where Russia, January 2022, started mobilizing near the Ukrainian border. And this is where the market started pricing in that invasion. Invasion happened, blah, blah, blah. Price of oil starts coming down, peaks. Markets don't give a shit anymore. Markets price that out. But what do the markets start pricing in now? Higher inflation and the need to hike rates. And then you get that 2022 rate hike cycle. Now, over here, I don't even know how that came up. Refresh needed. 2022 rate hike cycle. Now you can start to see this massive picture that gets painted on every single move that's taken place all the way since 2008. We had the global financial crisis, need for the Fed to step in. Fed started their taper tantrum, started tapering asset purchases. Gold came down. Markets started pricing in hikes. Trump versus China caused inflows because of geopolitical uncertainty. Gold bulls. We had Fed step in, started devaluing the dollar. So, of course, gold goes up. Russia versus Ukraine. Then we have the 2022 rate hike cycle. Inflation bottoms out. What ends up happening? Oh, shit. Markets start pricing in those cuts. Now it starts to look like a bigger picture that you had no idea about before coming to this live. And so this is what ends up happening when you pay attention to what actually goes on behind the scenes. And now we're in a phase where we've had this massive upside because of Jackson Hole Symposium last year. We had rate cuts and more tariff tantrum, pricing and uncertainty on gold. Then we had the war start right over here. This was the start of the war. right here, because I remember I closed my gold buys right there, man. I had a very uncertain feeling. I was in gold buys days before the war. I held it over the weekend. By the time markets opened, for some reason, my mind was like, you need to close this position right now. Because for some, like, I was not even thinking we were going to get this massive outflows. I was like, okay, we'll start setting up for sells over the course of the quarter as we tap into the zone, right? But that came instantly. The start of the war triggered the sell-off because oil shock created inflationary risks. Now the markets are going to price in higher rates for longer, and that's what caused this. Now, if that comes down, inflation goes away, CPI comes down, we price out hikes. Now we start pricing in cuts, and it's the same story as it was over here. Now, if that makes sense, please drop a 1 in the chat so I can continue on to what we need to look at now. So if that makes sense, that quick lesson, please drop a 1 in the chat, right? So this was the move that we called out in FOMC. The following daily candle came down to 40.25, and you got a clean play towards a range towards the upside. Now, we didn't get those buys come in afterwards, right? We got a continuation towards a downside, and that move got corrected. That's why market also has been giving you a reversal risk, because it hasn't been saying it's a continuation or that it's more overbought like ES currently is, right? And you can always check, like, why is this overbought? Like, Fed holds rate, keeps cuts on the table in 2026. It's helping, but the U.S. Treasury yields still 19 years high, right? So it's worrying trade. So these are still, you can see how there's factors that align up with the sentiment, but also some that take away from it. And the markets are very mechanical, is that if there is a price to fill, the markets will go to it. And especially as being in a balanced range like this, you have to keep into consideration that the market doesn't owe you anything here. The market doesn't owe you a clean move towards the upside. Until we get that catalyst, we're not going to get that clean play towards the upside. And until then, what we can do is be cautious, is that if you're in these buys or even buys in FOMC, just know there's no one-sided clear sentiment, especially because the Fed tone was a hold, but it was a dovish hold. But there were still some hawkish dissenters. And that's the point. It was a very mixed FOMC. Now, if there wasn't those dissenters, then we likely would have had gold continue to 41.60. And these are things you need to think about, is that if everybody on the Fed committee leaned towards holding, now that looks way more dovish than 3 people wanting to hike. And that's what's stopping gold from continuing to push up. That's currently what's also stopping ES and NQ from continuing up. But that doesn't mean the market can't continue based on any other incoming data. Now, for next week, this is what I want us to focus on, is that the markets are going to focus on NFP next week. And here are what we're going to pay attention to, okay? This is where it gets interesting, guys. This is what I talk about being forward-looking. People come to the charts on Sunday. Most of the people come to the charts on Sunday. They look at Forex Factory, Red Folder News, because they don't use market. They look at Forex Factory. They're like, oh, well, 8:30 a.m., I got NFP. Thursday, initial jobless claims. Tuesday, factory orders. I'm not going to trade during those time frames. I'm just not going to pay attention to markets. I'll come after. I'll come before. I'll take my 10 pips. Now, what I want you to focus on is preparing for something like this before. NFP forecast is 91,000. Banks are forecasting 80K. There's a differentiation between the retail forecast and the bank forecast, okay? Prior was 57, minimum is 69, and maximum expectation is 140. Now, if NFP misses the forecast, especially the bank forecast or the retail forecast, and comes outside of this 69K or the 140K range, then you're going to get excess volatility, and we're going to play this. Because if NFP comes out lower than expected, this is bad for the dollar. Why? Because markets are going to price in rate cuts, because they price in that labor market is under stress. So they need to price in cuts. And look what unemployment rate is also forecasting, an increase. Now, if we get that increase on an unemployment rate, we get bad NFP, this is going to be a bearish dollar. You're going to get, if we get a decrease in unemployment rate, you're going to get a bearish dollar, right? And you're going to get a bullish gold. Where in this case, if we get those bad jobs numbers, you can 100% get something like this playing out, where we sweep these lows, set up ahead of time, and position ourselves for that bad job support. Now, I just want to cover NQ real quick, because someone asked, why NQ is dropping. So NQ isn't dropping. All I see here is NQ has had this rotation because of what was going on, oil prices spiking up, and we saw that rotation out of equities. But NQ has barely dropped. This push towards the upside was a 5% play. And this move toward the downside is a 0.58% play. So NQ has corrected barely 10% of its move since Tuesday. So it's not dropping. US markets are not dropping. I want you guys to get out of the 1 minute time frame and stop looking at the charts like this. Okay, this is what 99% you do, is that you come to the charts and you look at this and you're like, fuck man, today I'm gonna sell because this last 30 minutes I've been selling. And then I come here, I'm like, oh shit, man. All I see is buys. I see buys here after the Fed held rates. I see this in the way to push higher. This could be the next area. Oh, there's more resistance here. Maybe we calm down, grab more orders before we push higher. Now that's logical. Now what I'm not going to do is try to look for this spike down and try to capitalize on that. I'm going to be more patient, go with sentiment. Market right now tells me that NQ is a bit overbought, right? Like there's a bit of a reversal risk, or ES is a bit overbought, but there is a support we can tap into, and it's the same support as previous break of structure. So if we can tap into that area, and we'll go to that on TradingView, if we can tap into this known area over here, right? If we tap into this general price sensitivity area, where previously as well we had lots of price sensitivity, and we'll draw that out right here, we had a break of structure, retest, push up. Now if we come down here, maybe even push a little bit deeper and continue up, now those are fantastic buys for me to take advantage of. And I bet you this lines up exactly with the fib as well. Boom, 50% retracement, 38% on this zone. So you can see how that plays out. But NQ isn't dropping, my friends. NQ's barely moved. So when you're just staring at this sort of price action, zoomed in like this, fuck man, that looks like a sell to me now. But if I now zoom out and I look at the monthly, or I look at the quarterly, man, there's no way NQ is a sell right now, right? There's no way NQ is a sell on 4 hour unless we get some sort of catalyst. And keep in mind, markets are very catalyst driven. There could be something that happens that while I'm saying this, where Trump comes out, absolutely bombs Iran, and then NQ drops, because the markets move off of catalysts. They don't move off of what we expect. And this is where traders come to me and they're like, oh, you're saying that gold has a reversal risk and now gold has come down. Yes, dummy, because that's what the reversal risk says, that there's a risk of reversal on this, right? Markets are moving off of events that are happening. We're not in control of when events happen or if they randomly happen. Unfortunately, I'm not in control of when Trump tweets. And if Trump tweets, sometimes it will invalidate markets' bias, but that's why we have the opposite end, what you need to watch out for, right? What's keeping gold bearish is certain elements like this: oil-driven inflation, expectation of Fed hike, right? U.S. blockade threats and redirected vessels tighten risk to oil shipments, just like we had today. We had some breaking news headlines regarding the Strait of Hormuz. So do you see what I mean? Markets are always moving based on things that are happening right now. Fed Kashkari also said dissented at FOMC as he favored 0.25% rate hike. So you have now Kashkari coming in being more of a hawk, and that's clearly causing outflows on gold as well right now. That's why we have more of a reversal risk. So you guys need to think about sentiment as not binary. There's not a 1 or a 0. There's different states to it. And these are also things in where we are improving our engine and our actual platform for it, because guess what? Gold has been in this range for over a month and a half now. Now, there's been times in this range where we've had clear direction for buyers, clear direction for sellers, but we still remain in this balanced range despite the catalyst that we're receiving. So what do? We just take our piece of the pie and get the fuck out. Is that we analyze moves like this in FOMC, we take advantage of it, get the fuck out. If I took a buy here last night, took a loss, I got out, man. There's no point in trying to chase that. Is that I took this buy, made money. I took this buy, made money. Took this buy, took a loss, and that's fine. I'm good with it. My stop loss was right here. I took it here. My stop loss was below this wick. Perfect. I'm out. That area didn't play out for me. I'm not looking for anything because it looks like now gold is just going to stay in this balanced range. And now it's just canceled out that FOMC move. So you can still see how there's still hesitancy in gold to continue pushing towards the upside. So when you see markets bias like changing over here, don't be surprised. It's because we're still largely in this range, right? Kevin, is there anything that you have your eyes on for the session?
Yeah, so I'm definitely keeping an eye on, like we were talking about, NASDAQ.
Sorry, Kevin. I'll be right back in just 5 minutes.
Yeah, bro, do your thing. Absolutely.
Thanks,
so I'll be keeping an eye on NASDAQ. Now, I like what Luke mentioned before about NASDAQ, and I like that he corrected himself, right? So NASDAQ's dumping. I mentioned, well, be careful. Don't get confused between dumping and pulling back. And like Nalab mentioned too, right? If you're stuck on a 1 minute time frame, yeah, NASDAQ is dumping. If you're looking at it from 28,620 to where we are now, that's 160, 200 points. Sure, it's dumping. Look at a higher time frame, say, oh, wait a minute. Oh, okay, we're still above our open, still above previous day high, making some higher highs. Now I'm zooming out even more, and I see that we're also making higher lows. We broke some very strong higher highs that we had over here. So we're starting to get that shift in market structure, right? Yeah, exactly. Luke, you got it. Top-down analysis. Can't forget it. If you forget top-down analysis, you're going to be stuck on that time frame. You're going to go, this is the way. And you're going to go, oh my God, why'd I get stopped out? Now, what I'm looking for on NASDAQ today, I am looking for a pullback to 28,150. Now, I don't know if you guys remember this, but 28,150, if we extend this to the left, look at how great this area has been for shorts for the past few days. Sells continued, sells continued, sells continued. So this was a great area of resistance until yesterday when we had Microsoft killed it with earnings. We had Amazon came out and said the same thing. Amazon came out after the bell on this day and said, oh, we're also doing well. Because what Amazon is doing differently, what Microsoft is doing differently with that higher CapEx is they're turning it directly into revenue because they have these cloud servers. Microsoft has something called Azure, A-Z-U-R-E. That is their cloud server. Amazon has their AWS server, one of the biggest servers in the world. So when they're spending on CapEx, that's going directly into a funnel that's bringing them profits already. Whereas Tesla's on the other side of it saying, oh, we're selling a lot, we're doing all of this, but hey, guess what? We're not making any money right now. Tesla's betting right now. So there's two different ways that companies are seeing CapEx. Microsoft and Amazon, they're spending on CapEx and then they're making from that CapEx. Tesla is spending on CapEx, betting that in the future, they're going to have follow through. They're going to make more money off of it. This is a very common play for Tesla. So don't think of it as, oh, this is the end of Tesla. That's not what I'm saying. That's most definitely not what's going on right now. But at this point, that's how markets are digesting it. That's how those investors are forward looking in the markets. So that's where we're at right now. But in terms of where I'm looking for on NASDAQ, I'd love to see the 28,150. I think that if we get the sell-off towards the open, we pull back 300 points there. Kevin, a 300-point pullback, that's crazy. Yeah, I guess it would be crazy if we didn't zoom out and recognize that yesterday we had a 1,200-point rally. So if that's the case, it's just, listen, we have to always look at everything from perspective of the entire market's movement, not just what we want to see. So when we're looking at this entire day, we're looking at even a daily time frame. We had a move yesterday on NASDAQ that brought us from lows to highs of a 4%, over 4% rally on NQ, 1,200 points in a single day. So what makes you think NASDAQ can't pull back a measly 300 points and then return back to those new high of day? So I'm looking for 28,150, and I'm going to be looking to target 28,700. Guys, that is a 600-point move right there, 560-point move. Again, it sounds crazy, but looking at the volatility we're seeing in the market, it's reasonable. Can you go over hyperscalers? Yes, absolutely. Let's take a look. Hyperscalers. Let's see. So let's ask market. Can you cover hyperscalers? Can you cover hyperscalers? We'll say, can you cover? Can you go over? Same difference. Sup, Luke? Oh, we got a Lucas and we got a Luke in here. I think Mel got a 28K trade on the Nasdaq. Yeah, I think you're right. I think it was like 25 or something. Yo, Mel is crazy, man. Wild trader. I'm very happy to have met her and bring her on the show. Great person, great trader, great attitude. That's what makes you a great person, is your attitude. Everything we talk about, trading's foundation, and we need the foundation to be consistent. Well, if you look even further past that, you need to have good attitude. Good attitude will get you where you want to go in any industry in this world. I can cover the major hyperscalers, Microsoft, Amazon, Google, Alphabet, Meta, with full fundamental screenshots, intraday bias. What would you like to see? Tell me about... Yeah, let's do this one. Tell me about Microsoft, Amazon, Google, Meta, fundamentals, PE margins. Let's do that. Perfect. Yo, Jermaine, good morning, brother. Good morning. Hello, and welcome. Look at this. Look at how, oh my God, this is beautiful, man. As a trader of the Nasdaq for years now, and being somebody who watches these equities, this is top tier. This could be its own platform in itself. Microsoft market cap 3.35 billion. Microsoft as a prominent global, we know about Microsoft. 40% net margin, PE 25, very low PE compared to others. Analysts see 20% upside. 20% upside on Microsoft after those earnings. Amazon, PE ratio of 18. Amazon's an even lower PE ratio, giving it even more room to move to the upside. 17.4% net margin. Wow, that's a nice little margin right there. Analysts see 35% upside. That's funny, man. I just said the PE ratio is lower, gives it more room to the upside. Next thing we see, analysts see 35% to the upside. Google, let's see, 54% net margin, highest in the set. Not too comforting there. PE is only 16, which it is lower. Analysts see upside of 27%. And what else do we have? Meta down 8% today, PE of 20, so it is in that range too. 29.8 net margin. Analysts see 34% upside. I don't know her Twitter handle. I know her Instagram is _her_trader_lounge for Mel. So this is pretty cool. It gives us a nice breakdown on our equities and hyperscalers. Was there anything specific you were looking for on these? But let's see. You know what? Let's ask market. Why did Tesla go down from earnings with high capex while Microsoft and Amazon rallied, but still also had higher capex? Now, before it even answers, it should give us some type of response telling us how, because they're making money from these situations, right? Amazon, Microsoft, they're making a lot more money now. Their margins, their percent returns, their percentage period on those cloud services is up 30 to 40%. Look at this. Let's see. Oh my God, it does. Tesla, oh, this is amazing. Tesla sold off while Microsoft and Amazon rallied because the narrative around the capex differed. Amazon's AI capex delivered immediate AWS growth payoff that investors could see in the numbers. Microsoft's spending is tied to visible Azure/AI momentum, but Tesla's higher capex raised execution concerns without clear near-term returns. Compound by merger speculation with SpaceX and a safety probe that muddied the earnings today. So Amazon up 10% post-earnings. CapEx spikes was validated by AWS growth, Microsoft's Azure AI demand is robust, and spending supports a clear high-margin growth engine. And Tesla 3.3 up 3% today. Remember, that's today. Tesla's earnings were last week. A post-earnings weakness implied. Higher capex with no immediate revenue catalyst. That's perfect, man. Exactly what I was covering. That is beautiful right there. So let's go back into the NASDAQ, find some price levels, find some areas we're looking for. So like I mentioned, I'd love a pullback to this area. If we don't pull back to that area, I will be looking at more recent zones. We could use something like a volume profile and see, okay, it's a D-shaped volume profile. You guys already know when we see a profile like this, we want to look to buy the low, sell the high. So not only am I going to be looking for 28,150, but I'm also going to be looking to see how we react to 28,317 in case we don't get that full pullback, that full 300-point pullback I'm looking for. We might get a 100-point, a 200-point pullback. Again, that's a lot more reasonable. We get that pullback, we hold. We hold off the open, and then I would look to see, can we hold off open and head to new high a day or that next area of resistance around 28,700? Kevin, can you look up BSX for the long term? BSX ticker? Sure. Let's take a look. We could ask Market about it. Give me the rundown on BSX, on DMX. I'm just kidding. BSX. Oh, look, guys, somebody's knocking on the door. There he is.
What's up, man? Sorry, I got caught up with a bunch of work stuff.
All good, bro. Yo, you caught up with work stuff? No, I couldn't imagine. Awesome. Let's see. BSX right here. Boston Scientific at $46, a $68 billion mid-tech leader trading at 18 times earnings and 17% net margin. But analysts see a 54% upside, 39 buys, 0 sells. That's a nice little sign there if you are long. What's your positioning on it? Even as recent earnings showed Watchmen and EP pressure that forced a guidance out. So here's a quick little rundown. No, lab man, I was telling them the way that Ask Market breaks things down, gives you the analyst, just gives you everything you need about a ticker is mind-blowing.
It is, right?
It's a platform in itself.
Well, it took me a long time to engineer this. Like, I wanted to do it in a way where it shits on everything else, man. Like, I've yet to find another trading product that is as useful as Ask Market. I've tried every other AI trading chat in the space, from the biggest companies, from TradingView. Like, none of it compares, and I don't understand why. It's either none of them want to do it the right way, or they're just lazy engineering. And one thing about me, guys, I hate laziness. I hate laziness in anybody around me. I hate people who put lack of effort into what they're building in life. And I think anybody who does that deserves to not be in the game. So if there's any platform that you guys use right now that you think the solution isn't good, or if you just would like us to mess with them and for us to replace all their features and give it to you guys for free, let us know, man. Let us know. Like, if there's any other platform you use that charges you too much money, doesn't provide half the value that Market does, you DM me directly, or you send me an email and telling me, hey, Nilab, I would love if Market team could come out with this feature. And if it fits into our vision, we'll absolutely add it. There's been so many times users reach out to me. This was recently. Somebody talked to me about gold's bias and how they were getting a bit confused in the range. So we added more states, like over here for ES, bullish overbought, right? So why is it overbought? You can check. So tip, pullback risk, don't chase the buy, right? Same with, let's go NQ. NQ is saying, and then gold. Oh, look at that. Gold's now switched to neutral ranging, because that's what's happening, guys. Gold is switched to, look, updated 3 minutes ago. Yes, it's a neutral ranging because that entire move got corrected in FOMC. So we know that we're just in a ranging market. Now it's better than seeing slightly bearish or bearish, but you know that there's different states here. So these are things that we iterate on. Shout out to the HTL community. They've been giving us crazy amounts of feedback for Ask Market. We gave Ask Market to about 30 members of the HTL community I asked Mel to choose for us. So they've been giving us immense feedback, and we have just been working our ass off to make sure all that feedback that they gave us is fixed, it's covered, and it's more usable. So even like recently, I was just testing what is market sentiment, bias check, how did today's rate decision go, what are some dovish, hawkish phrases. One of the best things I love about this is even if somebody doesn't have access to market, I go here, I click share to X or copy link, and now I can just paste that. And then anybody who wants to check out my research can come here and look at this for free. So this is where we're going, is that we're really going down the route of becoming the home of financial market research. And this all started in my bedroom years ago. The young kid just wanting to build a company. And now I got the best team in the world. I got a team that never sleeps. Yesterday, a bunch of us were up at 12:30 a.m. in a call, just going over Ask Market. Not because we have to or because I asked them to. It's because I was working. They decided like, fuck it, let's just do a call right now and go over some high priority stuff. That's the team we have, is that we don't have a team that clocks in at 9 a.m., clocks out at 5 p.m. Like we got a team that's here day in, day out. Like I know if I call Kevin 1 a.m. Saturday, Kevin's going to pick up. He's going to be like, yeah, I got you. Like that's the type of reliability I'm surrounded by. And that's the same thing that I expect my team to have from me, is that they could hit me up at 4 a.m. and be like, yo, I know you're snoozing, princess, but I need you to wake up because shit's going down. And I'm going to be up right there and then. So thank you again for everybody who supports us. I know I say this a lot, but it's needed to be said, is that I'm living my dream. I get to build a tech company. I get to work from home. I get to go to the gym when I want. And to me, there's nothing better in life than that. Being in control of your time and just having fun while you're building and working with such great people. So yeah, we have this launch coming up in a few days. August 4th is our official launch. Make sure you guys sign up for the launch. I'm going to be doing a stream. And again, we'll be giving out prizes. We'll be going in depth on how this is the best financial market platform in the space, and how what we have come out with is nobody's come out with it yet. And again, I challenge anybody else to try to build what we are building and at the pace that we're building it. I'm very confident in my skill set, my team's skill set, and our conviction on this platform. So you guys can try. You guys can try to outbuild me. You can try to outwork us. It's just going to be the hardest feat you'll ever have to do in your life, because I'm surrounded by people who don't want to stop. Like even if I told them take the day off, these guys are workhorses. Like they just want to continue building market. And I'm forever eternally grateful for that. Just like how every single day we've guided you in the markets while gold has been in such a shitty range. And we were the first people to tell you, guys, we're going to start selling. And here as well, we were telling you the sells are going to continue to come in again in the rest of the quarter. And then when we finally reach these lows, we were the first people to tell you, be careful with selling now. This is a time you don't want to be selling into these lows. Is that if you're selling, it needs to come from the highs of these ranges. And if you're buying, it needs to come here. Is now we're becoming in a more balanced range for the time being, until we get a clear catalyst of any of these playing out. And it's not just one, right? It's all of these playing out subsequently. One domino falls, this happens, this happens, this happens, this happens. It's the domino effect. And this is how the markets move, is that when there's enough catalyst and things that have happened that line up for that one-sided volatility, that's when you get clean moves like this that play out. And even in these clean moves that we know are super clean and trending, there's still people who are fighting against the grain, trying to buy every opportunity here when they're not aligned with the macro trend, right? Same thing here. There's people who are selling the bottom of these ranges because they're expecting the breaks, but they're not realizing there's 10,000 things that have to happen before the market even breaks lower here. Is that we would need, just like how we need a catalyst to break out of this range, brother, we need the same catalyst to break towards a downside, obviously in the different magnitude. But the point being is that you need something severe to happen, whether that be new escalations in the war front and oil spiking up, then you know gold's definitely going to break down. But now if oil continues to just correct and completely fill this range towards the downside, that means gold doesn't have to push down, because we don't need that tight monetary policy. And the financial markets are the first ones to start pricing that in. So I hope when you guys come here, even when we don't take a trade in the day, you walk away with insights that you will not find anywhere else. And that's the differentiating factor here. You can join other platforms' live streams because everybody does a live stream now, right? Everybody wants that attention, but none of them are willing to actually provide value for it. Some of these live streams, people go on, they just banter, they make memes. We do both. We like to have 80% focused attention to the financial markets, 20% fun. It's the 80-20% rule. And we have a great time. We banter in the comments. Me and Kevin banter. We make fun of each other. It's because we're boys, right? And then we come back here. We're like, okay, this is what's coming up. This is what we have to do. These are the scenarios. And then we call out some banging plays, right? So the point being, guys, this is just like how we're here right now. We're going to be here 6 months down the line when gold is sitting much higher than it currently is. And now you're like, Nalab, how do you know that's going to happen? I don't. All I know is that even if some sort of catalyst that was to happen that takes gold maybe further lower, I know eventually this is going to play out because eventually those cuts are going to come in. Do you think rates can just remain higher for longer forever? Do you think inflation is going to remain high forever? Do you think oil is going to remain at 80s forever? No. The price of oil has to come down. What goes up must come down. And what do we have coming up? Midterm elections. So, there's no president that likes to have a war floating around his head while he's fighting for midterm elections. So what makes the most sense? For someone like Donald Trump, who we know loves to play the game of chess on the global stage, he's most likely going to sideline the war because they have full control. It's up to them when they invade, when they do these strikes. It's all theatrics. Might as well, guys, let's sideline this. Imagine this. Let's sideline this. War is done. Press conference. We're not focused on this now. We have bigger things to focus on, blah, blah, blah. Israel is safe. And then oil comes down. Midterms happen. Trump wins midterms. We all get trumped, but we're on the right side because we're focused. And then you see markets start rallying because rate gets priced in. And maybe 2027, they reignite the war because no war has died down instantly. Somebody said, can we sell now? No, you cannot sell oil now.
Well,
I
no,
would sell oil now until we get proper confirmations. And what I mean by that is like you want structure to develop. You want to be shown that markets are pricing out those escalations, right? Right now, all we have seen is we had this escalations being priced in, right? You had de-escalation attempts right here. And then now, even as I drew here, by the way, I drew these arrows when oil was sitting right here. Not that I was expecting it to come down, but I'm just trying to show you guys that if this spike gets faded out, what this means for the financial markets and overall price setups that are going to go on for like positioning setups, right? There's trades that we take, there's scalps that we take, and then there's positioning that takes place in the markets that really drives momentum and overall direction. But that positioning builds over time based on the macro and geopolitical environment. Like, look at this the short positioning that got built up here, okay? Every single short that took place here is now going to start unwinding once the macro sentiment starts shifting and the geopolitical sentiment starts shifting. So that's why I'm telling you, it doesn't happen instantly. Just like how I mentioned when we tapped into this range in end of June, don't be shocked if we're here for 3 more months in this area, because that's how it's played out every time. Is when markets enter a balanced range like this, man, we consolidate for such a long time. When we go here, look at this here as well. When those cuts were on a pause, the markets consolidate for such a long time, and the Fed is chilling. Even here, look at this. The Fed was hiking all the way till down here. They went on a pause. When they went on a pause and they got confirmations that the Fed was done hiking, the market started rallying. And it wasn't when they announced the cuts, it was when the markets realized that inflation had come down and there was no need to hike again. Remember what War said? War said that the market should pay attention to what the economy is and not what the Fed says. The market's never going to say that. Okay, the market's never going to do that. Markets are always going to front run. Okay, so I'm not sure what question.
Basically what Davey was saying was Trump said the U.S. is hitting Iran hard. Can we sell now? So in the past, whenever we got a big headline about Trump bringing more strikes back on the table, we get that bearish reaction. But something we covered recently is that markets are no longer taking these headlines in for account and saying, oh, we're attacking them. We got to sell off now. So
Yeah. So the biggest telltale signs of whether this is going to impact anything is, did it impact the price of oil? If it impacted the price of oil, other markets are going to feel it. If the price of oil corrected just as it did right now, completely corrected that move, markets don't give a fuck. Markets don't give a shit about what headline just came in. The times you will see when headlines actually make an impact is when it actually impacts oil price, because oil is the center of this all, right? Oil is the main driver of the inflationary shocks that we're having. So if the price of oil gets impacted by these escalations, that's when you'll see Nasdaq coming down, gold coming down, ES coming down. But unless if that doesn't happen, then we're just going to continue with the sentiment that was set in stone by the Fed over here, the Fed hold, and what the markets take that as, right? Even though we talked about here, once we break out of this corrective structure, these retests and these opportunities for buys are going to line, and then the market's going to end up here. And then given that next week, let's say next week we have bad NFP, higher unemployment, this is going to push equities back up to here, right? This is going to push ES back up to here. And then what's going to happen to oil? Oil is going to fade out the move when we go to NQ. NQ is also going to end up back going up into here if we have higher bad unemployment. And then same with gold. That gold eventually would end up back at 4150s throughout the week if we got that bad unemployment and bad NFP and higher unemployment data, because that would point towards rate cuts. If labor market is taking a hit, remember the Fed has a dual mandate. Their first mandate is keep inflation at 2%, which Warsh emphasized at the press conference. And then their other mandate is keep labor market contained, keep it full, like keep it strong, right? Keep it balanced. Now, if it starts swinging too much towards one side, higher employment, bad jobs report, markets automatically price in those rate cuts. And what ends up happening is we start pushing up wherever that may be from. And then next thing you know, we get the setup for the week, and then maybe during NFP, right before NFP, gold sitting here, and then you get that spike that fills that range. But that's that pre-positioning that takes place. So you get what I mean?
Yep, 100%. Sands, you're 100% correct. Trump strikes escalation headlines have less and less of an impact towards the market.
Yeah, and if you really want to judge the impact, again, go and see when Trump says something, go to the price of oil. If the price of oil, the move gets fully corrected and there's not continuations, like now, if we see price of oil break this, clearly those escalations are holding weight. And then okay, we're likely not going to get NASDAQ continuing toward the upside. Maybe for the short term being, we'll get NASDAQ continuing back towards these lows or somewhere within here. So point being is that don't take a headline don't take what Trump says for what it is, because I'll show you examples here, okay? And actually, let's go to market for this. So right now we're a bit overbought on ES, but we're still bullish, right? We're still bullish that we can continue pushing up. Now, if I go to backtest fundamentals, I'm going to go to ES really quickly and go back to January. Now, I want you guys to pay attention to this. Excuse me. So start of the year, markets were pricing in this war, right? Actively pricing in that war. And then we bottomed out at 10% that Kevin called right here, by the way. Kevin called this here. Kevin called this here. I haven't seen anybody else call this out. So Kevin called this bottom out right to the point, because he said Trump's going to taco. And I was like, I agree with you, Kevin. Trump's going to taco. Trump cannot handle 10% downside on U.S. equities. Now, Trump tacoed 4 days later on Tuesday, 7th of April. Trump announced this 2-week ceasefire with Iran, okay? And that set the sentiment for the rest of the month and a half. But what ended up happening was that during this time, we still had escalations. Escalation right here, markets gapped down, continued up. Every single headline during this phase got bought up. This was a headline as well. Right here, escalating Iran tensions from Tehran, air defense activities. So you can see we had an impact. The markets faded out that move because Trump had mentioned that ceasefire, and that was the sentiment markets were running off. So during this phase, and you can go back to Market in the Morning episodes from this time, is that while these headlines were coming out, we were fading them out live. is that we saw these moves happen towards the downside, and me and Kevin were like, okay, time to buy now. Time to buy now. Markets are going to fade this out because we understand the regime we're in. The last time that took place, I'll show you where it was right here. And we bought this. This was a headline as well that we bought live. You can check our live from June 1st, 2026. Escalating Iran-Israel tensions, Hormuz blockade, drive risk off into ES. But then we saw, hey, markets don't give a shit right now. We're going to push up likely. And we pushed up. So it's that same thing. And that's where we topped off before we had more actual escalations take place. And this was over here. This was actually a bad NFP report right here, right? So this was that NFP play, stronger than expected NFP, which we also called live and our traders caught. So guys, these data reports, these catalysts, we trade live. We call it out, just like how we did on FOMC. You remember that? We called out this entire upside, this correction in the next daily candle, told you look for buys as well. So all of this makes sense because we understand how money moves. If you can understand how money is rotating across global markets, it becomes way easier to trade the market that you focus on. If you trade NASDAQ and you understand price of oil is spiking, that means you're not going to be looking for buys on NASDAQ until you get a catalyst that points towards it. And that catalyst was FOMC earlier this year, earlier this week. But since we've been spiking on oil, look at NASDAQ. NASDAQ's been pushing down. And it's the same push down that we've had on ES and on oil as well. It's like when oil started spiking up over here, that's exactly when NASDAQ started pushing down as well. So you can see these are correlated assets, the same as gold as well. That's why gold was selling off from up here till down here until FOMC because of that play. So it's always something happening, and it's your responsibility as a trader to pay attention to what's going on in the market that you trade. And if you don't, my friend, you're just going against the grain. You're going to have 10 times of harder time. You're going to have way harder time breaking in and understanding what's actually going on in the financial market that you trade. Now, one thing that I want to end off with because I have a meeting in just a few minutes. But
sure you do.
This is I think my internet's just being super slow today.
We had a question
in your screen, Kevin. I think I'm cutting out a bit. Oh, can you hear me?
Yes, sir.
Can you mind sharing your screen? I think my internet's a bit laggy right now. Awesome. Yeah, I was just going to go to the calendar, Kevin, real quick for NFP.
Yeah. This coming NFP or last?
Yes,
NFP?
sir. This coming NFP. So, yeah, should have it? Okay, awesome. So, guys, we have NFP coming. And remember I said, markets there's always something around the corner. If there's a catalyst that just took place, the markets digest it. And guess what they're going to do? They're going to focus on the next one. And the next one just ends up being labor market data for the month of July. That's coming out the first week of August. Now, if we see that spike in unemployment rate and we see bad NFP, we're going to get markets pricing out those hikes and pricing in those cuts. Okay. Now, if we see that, we're going to see S&P, we're going to see NQ, we're going to see gold all rally based off of that sentiment. Now, Kevin, could you just cancel this and go to NFP from last year? Sorry, on the charts. If you can go to gold.
Yeah.
And go to find NFP, which was, you know the impact on there, right? Like you can find it. It was on June 5th.
June 5th. June 22nd, 23rd, 15th, June 5th, right here. There it is.
Yeah. So over here, sorry, what was I about to say? Yes. So here the reason we had this massive push towards the downside and it carried out into the next week was because NFP came out way higher than maximum expectation. It came out above forecast, but it came out at 172,000. The maximum forecast that the institutions were anticipating was 125,000. Okay. Every major data report has a maximum and minimum expectation. Forex Factory will not tell you this because they do not pay $500,000 a year for data. Okay. Trading Economics will not give you this because they also don't pay $500,000 a year for data. Market will tell you this because we pay $500,000 a year for this data. Okay. So this isn't just comes out of some random market analysis or something. These are actual numbers from institutions that puts a big hole in my pocket every month. But the point being is that we broke that expectation. So the markets took it as a surprise. And because it was a surprise to the market, it was unexpected. And when it's unexpected, that's when you get excess volatility. So same goes here. What we have in front of us when we look at the calendar are these expected numbers. You have these numbers that make sense where markets are forecasting higher unemployment and lower NFP. Now, if that doesn't happen and we get a surprise in the opposite direction, then obviously markets are going to continue to price in higher for longer rates. But if we get bad NFP, bad unemployment data, meaning unemployment goes up and NFP goes down, then you get rate cuts being priced in. And then Kevin, if you could just quickly switch to my screen here.
Oh, wait. I'm stuck on the pen. There we go.
No worries. And then if you get that, then you start seeing this continuing to build, the buy positioning here continuing to build. And then you also see the buy positioning on NQ continue to build. And remember, guys, things like this don't happen on the day of the event. The setup for these happens before. Now, just like NFP, June's NFP over here, me and Kevin called out those sells for leading into NFP the Friday before, right here. We called it out live in market in the morning, the sell we took on the break below here. And I even told you guys, do not fucking look at this buy play that just happened. Don't pay attention to that. Okay. And then to top it all off, Thursday, we took the sell here. So by the time NFP came out, guess who was already in profit on 1, 2, 3 positions before? Because this is position trading, guys. I'm not here to scalp 10 pips and move on with my day. I care about catching these massive swings. I care about riding sentiment from major catalysts that take place, such as FOMC, and then riding that position all the way down to the swing lows. And then when we reach a range, I want to take the buys from the bottom, or even over here where I had the buys right at the bottom of this range before FOMC, because they weren't going to hike. What told you guys they were going to hike? Just because some Citadel is saying there's a 32% chance of a hike? Guys, look at the data. Look at the facts. Inflation came down. Price of oil is coming down. You have Donald Trump telling you that he will bring the price of oil down. If he says that, don't you think the price of oil is going to come down? Everything Trump said, he ends up doing. He says you should buy Dell, and then Dell's up 30% the following week.
You should buy a Dell.
Yeah, you should buy a Dell. Go out and buy a Dell. And then Dell's up. So these things aren't random. It's these clues are given to us. So when these clues are given to us and I take this buy before FOMC 3 hours before, I'm not taking a buy. I'm not taking a buy thinking, oh yeah, they're going to hike and fuck it, I'm just going to lose money. I'm taking a high risk, high reward buy, knowing that, hey, the Fed's likely not to hike and they're going to hold. The markets are going to perceive this as dovish, and then we're going to push up. And I even talked about this before the rate decision. I talked about it during the rate decision. I said, even if Warsh comes out hawkish, the market's going to take this more as a dovish hold because they're greedy crackheads with capital. Now, we just had U.S. equity markets open and NASDAQ is pushing up. This is why I was saying, do not say NASDAQ is dropping. NASDAQ was not dropping. NASDAQ barely did a correction. Now, NASDAQ is absolutely margin calling those short sellers. And it's the same thing with ES as well. ES is also pushing towards the upside right from the retest of our corrective structure trend line that we had, and then continuations towards the upside above 7,500. So you guys heard it here first, man. I even told you that if after FOMC we correct down to here, take out this lows, it's still a buy. I don't want you guys getting lost in the sauce where this looks like a sell to you. How could this possibly be a sell? I want anybody to explain to me based off of, and this is where it gets, technical traders get caught up, is that they see dropping into here, red candles. Oh, fuck, man. I got taken out of my buy from here. I'm going to sell now. And then guess what the market does? Absolutely kills them. Absolutely makes them feel like shit. And here's where, you know what? We all go through winning and losing streaks, right? Yeah. Started the quarter, I went through a losing streak and I was transparent about it. I told you guys I was down over $15,000 at the start of the quarter, okay? Losing streaks happen. But one thing I always keep in mind is that when you're winning, you're not as good as you think. And when you're losing, you're not as bad as you think. because during those times is when your emotions are most heightened. So I know when I'm on a losing streak, I'm like, fuck, man, why am I a bad trader? But I'm not, dude. There's been times where I've made $80,000 in a month before. Obviously, like that not doing that every single, but I'm just telling you that my best month ever. Point being, I'm not a bad trader. It's just my psychology was not on point, other things happening, and it just caused bad execution in the markets. And that's for me to take ownership of. But the point being is you're not as bad as you think when you're losing, and you're also not as good as you think when you're winning. So one lesson that I've really put into stone is that if I'm on a losing streak, man, it's just way better for me to just take time away, do everything but look at the markets. And same thing when I'm on a winning streak, is that when I'm on a winning streak, I start to realize when my emotions start getting heightened and when I start feeling like I'm better than the markets. None of us are better than the markets. The moment you think that, you get humbled. The moment you think, oh shit, I'm a failure, everything's going horrible. Oh, my family hates me. Like I am such a bum. I barely have money. Guess what? God gives you one chance, pulls you right above the water, gives you enough chance for you to take one more breath so you can keep pushing forward. And that's what the markets are. The markets are one of the most dangerous environments in the entire world. There's no rules. You must set the rules here for yourself. So you are only here to save yourself. No one here is going to save you. No one here is going to make you a profitable trader. No one here is going to explain fundamentals to you, unless it's Kevin and I and my team, because we love our community. But guys, unfortunately, I have to get going. I'm 6 minutes late to a meeting, and I'm getting bombarded with messages about where are you? Where are you? The CEO shows up when the CEO wants to show up, is what I'm going to tell those people waiting for me. No, but thanks a lot, Kevin. I hope you guys all have a great weekend. I'll let you take it from here, buddy. But I'll talk to you guys later. Absolutely. And see you guys for next week. Monday, Tuesday, Wednesday. We're there, man. We're there live, active, and the launch. So let's smash it.
Hell yeah, bro. Have a great meeting. Have a great day, and have a great weekend.
Thank you, Kevin. Take care, man.
Later.
Bye.
All right, ladies and gentlemen, NASDAQ right off the rip on that open move right there, just right to that take profit level 28,709. I am not looking to buy these highs right now because we are coming into resistance. Now remember, guys, context is key, right? So context, yes, we are still bullish, but my edge says I can't go long going into a supply zone. I could go long if I'm down here and targeting the supply zone, but I can't go long as soon as we test it because look at the reaction we're getting so far. We are rejecting it. All those traders that saw this rally off the open, right? We always want to put ourselves in the mindset of retail and in the mindset of buyers and sellers. If I was a retail trader and I saw we were breaking higher over here and I don't have my edge, I don't have any zones, I'm just going, oh, I got to buy this. Markets are so bullish here. NASDAQ's flying off the open. They buy it just for NASDAQ to drop. That's, guys, that right there, take our measurement tool from those recent highs, 90-point drop. Imagine entering a long position on NASDAQ just for it to rip 90 points against you. You'd feel like, I'm the dumbest trader. I don't know what I'm doing, blah, blah, blah. And then guess what? Look at that 100-point pullback off of that level, 120 points. Am I going short off of it? No. Am I going long off of it? No. We are staying patient. Unless you caught those longs off the open with that price target, got to be patient. Book the both sides. There you go, brother. There you go. But great stuff. I know. I think somebody said that they were in some longs. I think they said, what'd they say? Where'd they go? Let's see. They were like, thanks, Kev, in around. And then they gave a price level. No, I don't see it right now. But yeah, guys, tell Mel I'm $20 in profit. Yusuf, man, I love you, bro. You're too funny, man. You are too freaking funny. At this point, I would want to see how NASDAQ and ES react to VWAP down here. Now, I know, man, Mel is inspirational, bro. I put the 50 EMA on my chart, and I've never been an EMA trader. I've never liked them. I'm not a fan of them. But and I'll tell you guys this too. Every strategy works. Opening range breakout, moving average, RSI, even RSI. Anything and everything works, just like anything and everything doesn't work. If you have improper risk management, you don't have any trading rules, you don't give yourself time in the morning to find your higher time frame zones, you're going to fail regardless of your strategy. If you do that, you have good structure in your trading, you have follow through, you have price action awareness, you have risk management abilities, you don't overtrade. You could trade any strategy you want. You could throw a fib from high to low and be a fib trader. You could draw supply and demand, be a supply and demand trader. You could draw a volume profile, be a volume profile trader. Any strategy that sticks out to you, that you're comfortable with, that makes sense to you, you're going to want to stick with and adjust as markets adjust with it. Wow, look at that rejection we're getting right here. Huge pullback. There's that VWAP area. There's that purple level. I had a key level on NASDAQ around this 28,500 zone. So we'll see how we want to react to this. Remember, we have 5 minutes in each of these candles because we're looking at a 5-minute time frame. So if you see this 5-minute opens and dumps right away, do you really want to sell the low of that, knowing we have 4 minutes left, plenty of time for it to do exactly that, wick right back up. All those people that got long up here, they got crushed. Now they tried to jump in sells down here. They're getting crushed too. Stay on the right side. If your original bias was long and we're getting a pullback, then you want to stay long. In her community, we love her. Everywhere we love her. Mel is great. I learned so much about price action from Kevin. I appreciate that, man. Yeah, listen, I'm here to help give you guys some insights. Me, Nalab, Imri when he's on. Let's get it. I got the rejection at the top. Stop trailing. Stop loss. 4K. Luke. Let's go, Luke. W's in the chat for Luke. That is amazing. Guys, I want to know your bias today. So let's throw a poll up there. Are you bullish? Or are you bearish, or are you ranging today? If you're taking a look at markets, S&P, NASDAQ, gold is moving lower. So this is more of a question for our S&P and NASDAQ markets today. Bullish, bearish, or ranging? If you're bullish, type 1. If you're bearish, type 2. If you think we're range bound, type 3. What are you for this Friday? It is the last day of the month. So right now, guys, just to put it in perspective, we had one of the strongest, really one of the weakest months in history on the NASDAQ. 10% to the downside. It was very close of giving us one of the weakest months we've seen in history. But what happened Thursday? We had the earnings that gave us optimism. What happened today? We're finding some follow through. This weakest month might pull back and really only end as a minus 6%, which is a great sign. It's a great thing to see for the buyers, showing us that those buyers are not giving up just yet. Now, however, if we are able to manage and hold below, so something I'd be looking for, right? We use areas of interest. This is a good support area. We dump through this, we could look for a retest. We could look for price to dump through, retest, go short, target that open price, or even target that original 28,150 that I mentioned earlier. That would be a nice trade setup, but we would have to break below first. You want to give yourself trade setups that require reactions off of specific levels. That will give you a lot more confidence and a lot more patience in your trading. We're getting ready to break that. Very close right there. Look at that drop lower. We are very close to breaking that low. 50 EMA, we're back below the 50. Very cool there. Very cool. Maybe we are just heading for the daily candle gap on. Yeah, exactly. We could absolutely be going for that daily gap. Daily gap is from yesterday's close to today's open. Now, unfortunately, NASDAQ didn't really have much of a gap on the open. If anything, we closed right here. We gapped down. So we already filled that because we're higher than that price right now. Oh, actually, no, duh. What am I talking about? So a gap fill is considered from the New York session close. So here is our 4 o'clock close. 4 o'clock close is actually right over here. So our gap is where we open that next day. So gap fill would be 28,233. Yeah, no, you got it, man. You got it. QQQ has bottom. We are going up to all-time high. Lucas, you think we're going all-time highs now? Obviously not this minute, not today, but I see what you're talking about. We could definitely go to those all-time highs. If this was our bottom on NASDAQ, now remember how we called out the absolute low on ES was a 10% level down over here. Well, guess what? NASDAQ, we had our 10% level right here. We crashed through it, hit 12%, Now we are already closing back above it again. So again, buyers showing that they're bringing us back higher. They're not leaving so soon, giving us some good bullish momentum. So don't be so caught up looking for a short right now. If anything, we should be trying to see if we could find a long. Now, I know I say that, but in reality, we want to look at what the intraday is doing. If we can hold below this zone now, so you see how we closed below it, a setup I like to look for is to make sure that we now stay below at the top of that zone. And this might line up for a short position, even if you're targeting just the open as first TP. Even the demand zone as your second take profit. 4 to 1 risk to reward. Boom, look at that. We got our retest and we're already starting to hold lower. Just something to consider. I'm not taking this trade right now myself. Been taking a couple days off trading and execution wise to sort of let the dust settle. Guys, don't forget, 1, if you're bullish, 2, if you're bearish. Right now we're pulling back, really giving us more of a range, which would be 3. Hey Kev, what's the indicator you use, like the volume bars on the right side? Tazzy, it's a good question. I do get that one a lot. So that's called volume profile. A volume profile is just that. It gives you the volume analysis on each price level, so the profile of the volume. So if we see a volume profile, and it looks like it goes off of different shapes, where we have main volume in the whole area, that's considered a D shape, where we would look to buy the low somewhere or sell the high somewhere, just like we saw right up here. And it's a lot more helpful than, oh, let me get that back up on there. It's a lot more helpful than the volume down here. Volume on the subgraph, it doesn't tell us buying volume. It doesn't tell us selling volume. Don't get confused, because you see how the buying and the candles down here for volume, it's green or red. That does not mean buying or selling. What changes the candle color on the charts here on TradingView is the color of the actual candle. So if we're on a red candle right here, then it's going to show you a red volume candle down there. Look at this, guys. We're getting that move. Let's see if this 4.5 to 1 plays out today. Nice little way to end the week right there. You could always go light in size. If you usually risk 150 per trade, you want to take a test on something, you risk 75, you risk 80. You risk enough that you know, if I take a loss here, it's fine, it's just a paper cut. But if I take a win, it's still a 4 to 1 risk to reward, 5 to 1, 3 to 1, whatever the case may be. Good selling pressure there. We are seeing in our equities, Microsoft trying to pull back, still at 457 is beautiful. Nvidia dumping, SpaceX dumping. Yo, we got to get SpaceX below 100, man. Give those SpaceX buyers max pain. Awesome, guys. Awesome. Beautiful. Look at that, guys. Clean right there on NQ. You'd be 70 points in the money already. 280 points total of this trade if it hits full TP. I will say, though, be careful of that opening price. We know NASDAQ does like to react near the open price of the New York session. So we'll be careful with that and be aware. Got to be aware of everything in these markets. All right. Let's see. Look at that. Still moving lower. Check our 1 minute time frame. We see that we're dumping with some strength. We gotta figure out the Mel strat. I'm pretty sure it's when we get those 1, 2, 3, these 3 bars to the downside, then she would have triggered a short, which lines up with my short entry as well. So that's pretty cool. Very nice, very nice. New 1 minute. Let's take a look at our VIX. I'm a huge fan of looking at what the volatility index is doing. That is the VIX. Boom, there we go. NASDAQ moving lower, Nvidia moving lower. Microsoft trying to hold up. Meta is moving lower. Apple's trying to hold up. SpaceX is dumping. Oh, let me get that. Where is it? There we go. Get the poll back up for you guys if you want to play along with that. Volatility index, VIX. No, we're not talking about the Singer DMX. We're talking about VIX, and it is flying right now. Is it flying all the way up here like this? Not yet, but we have to start somewhere, and this right here is certainly some volatility in the volatility index. So size down when we see something like that and trade with the direction. Let's pull NASDAQ back up there. My VIX chart on the bottom left over here is laggy. Thanks a lot, TradingView. Always about that lag. Look at this, man. These sellers mean business right now. We're about to dump right through that opening price. Real clean move right there. Beautiful. Love to see that. Look at that. We just wicked the open a couple times now. Be careful. Be patient. If you're not in the short from up here, you're not taking the short down here because you still have to keep that valid stop loss over there. And look what happens to your risk to reward. You went from a 4.6 to 1 risk to reward to a 1.5. That's a much bigger difference. Trying to copy your homework today, bro. What you in? I was looking to see the reaction. So originally, I wanted to see us move to the open price first, find support, and move back towards the 28,711 for a target. Markets opened, and we got that price target right away. We had a 30-minute support area right over here that we have now completely dumped. When we closed below it on the 5-minute time frame, so we closed below it right here. Where's my drawing tool? Right here is where we closed below it. The next candle, we wicked into it. We started to show rejection. That would be our trigger entry short. Stop at the high of that zone. Target the next key levels we have. Open and demand. So that would be the setup. Hey, the trading concept. What's up, brother? Hello and welcome back. Welcome back. Good to see you in here. Don't forget, guys, smash that like button. Fridays are usually on the slower side, so smash that like button, show some love. Let's get us up to 50 regardless. We're at 32 right now. You guys are amazing. What a community here. Certainly bearish Trump means business. We'll see, Davey. We'll definitely see. We got to remember Trump's had these headlines multiple times. And we got to remember, too, how doesn't matter so much what Trump says, but it matters how markets are digesting it. Now, no, markets don't eat his words. We all eat his words, but how do markets digest it in a sense of Trump says A, B, and C? Are we getting that follow through? Trump says we're doing this. Are we getting that follow through? Again, book take profit at 40.25. Thanks for the advice. Yo, I got you, brother. Absolutely. Let's see. Look at that. NASDAQ trying to continue lower. Gold dropping as well. Beautiful drop there on gold. XAU USD as well. I'd like to see 40.66 on GC. That would line up with 4,006 on XAU USD. So we'll see if we get that move lower. And look at this. I always tell you guys how sometimes we get similar setups on NASDAQ and gold even sometimes. So gold also had this 90-minute support area where price sold off, based out, rallied, new high. We wanted to see it as support. It failed that support. So we come to our 5-minute for an entry. We see we closed below it. It tapped into it. And then it tried to continue. So if you were in a trade on gold, possibly short-term shorts. I don't like gold shorts at all. And the main reason I don't like gold shorts at all is because of how the dollar's trading. Take a look at the dollar on the daily time frame here, guys. Dollar had a massive sell-off these past couple of days, while gold on the daily time frame barely trying to rally. So sometimes what that gives us is a little insight in that one of these are going to win, whether it's the dollar to continue lower and then it ends up pulling gold higher, or gold stays lower and then the dollar ends up making its way back above 100.60. If we do get that pushback above 100.60 on the dollar, then yes, unfortunately, I am going to keep that bearish bias on gold. For now, I do want to see us try to continue lower on a short-term move, but I am more bullish on gold at the moment. There goes NASDAQ continuing. Guys, that is beautiful. That trade setup I gave you before, hitting 2-to-1 right now. If you locked that in, I'm looking for that 4-to-1 to play out. Nice clean move there. Nothing crazy. Very good. Can you give VWAP band ideas? So let's see, a good VWAP band idea. So VWAP in the Fantastic Five, right? Oh, you mean VWAP bands. Got you. So VWAP bands are pretty cool. And like I mentioned before, I'll say it again because trading concepts, I know you just joined. But every trading strategy works just like no trading strategy works. And the reason I say that is because if you use the same system every single day, you're going to be able to adjust to different market conditions. Whereas if you're jumping and you're strategy hopping, that's inconsistent. If you're inconsistent with your strategy, why would you expect to be consistent with your trade results? So that's one thing to mention when it comes to different strategies and how they work. Now we could take a look at VWAP here. I don't use the bands myself. Does that mean nobody can? Absolutely not. It just means I personally don't use them. So let's take a look at upper band 1, upper band 2. Some people will even look at there we go, band multiplier 2. And let's can't get rid of the cloud. Where's the cloud? Profit target is 11 at the moment. Okay. Oh, there's the cloud. Now listen, if you're a VWAP trader, VWAP is your strategy. Yes, you're using bands because you want to be able to find those extension levels. Look at how well we reacted to band 2 over here. Now, band 2 is going to have a lot more strength. I believe there's a statistic for VWAP band 2 that shows it has a great reversal opportunity for one-to-one risk to reward trades. But again, what you're looking at is a price level or a support and resistance that's constantly moving along with price that's measured off of volume. So you could take a look at that. The issue becomes, though, if we do start selling off below it, you could be convincing yourself, oh, this is a long trade, and then we could just dump through it, and then VWAP band moves lower with price, and then you convince yourself again, oh, we're at it again, I got to go long, take another trade. That's where you don't just trade the strategy blindly, but you have a system in place around it. You have, okay, this is my actual entry. This is the reaction I have to see. No ifs, ands, or buts at that point. Let's take those off for now. Again, I don't use them myself, so I'm going to keep them off for myself. NASDAQ with a nice move. Okay, so again, if you're not short from up here, you do not want to be short down here. I like how we're reacting to the opening price level. That was part of my pre-market analysis with you guys, is how NASDAQ will react to the opening price, and that is at 28,317. Right now, guess what? We wicked it once, twice, now 3 times, failed to close below it. That is telling me that there are active buying participants supporting this price level. So keep a very close eye. This again becomes that rock in a hard place where we have support here, we have resistance here. We don't want to sell low, and we don't want to buy high. We want to look to possibly see, can we sell the highs if we pull back, or can we look to buy the lows, aka get out of my position, not just buy randomly when we break lower. So a few things to be keeping an eye on. Oh, bro, Piyush, you ended it early, homie. Nah, it's all right, man. Have a great rest of your day, guys. Don't forget to run that like button up. I appreciate you all for always being here. It is Friday. It has been a killer week. Let me know, guys, if you're bullish or bearish or range bound today on S&P and NASDAQ markets. Drop a 1 for bullish, 2 for bearish, 3 for ranging. Something I will note, and here comes that whole rock in the hard place narrative too. Look at how ES is reacting to that open price. It's using it as resistance, whereas NASDAQ was just trying to use it as support. So again, one of these are going to win. At this point, this short setup, we'd be looking to target 28,150. Can you see previous day lows taken in gold? Let's take a look. Daily time frame. Yeah, previous day low on gold was taken out. Yep. Yeah, gold, in my opinion, is still a stay away. And for the main reason being, look at the daily time frame. Excuse me, look at the daily time frame. Is this really a market condition you want to trade where the day prior, wow, we were bullish for 4 days. I got to go long when we open the next day. And then boom, we gap lower and we sell off 100 points, 850 pips. Yeah, no thank you. And then the next day you go, oh, wow, we were so bearish that last day. We got to move lower. Then we continue higher. These markets are extremely difficult to trade because they're beyond ranging. When we're ranging on an intraday scale, yeah, I agree with the trading concept. I like ranging markets too, but I like them more so on the S&P and Nasdaq. They're a lot more predictable, but easier to trade. When we're on gold, it's much more difficult because you know what it is. There's also different variants of ranging markets, right? And that could be anything from, let's see if we can find an example on ES&NQ here on the daily time frame. Pull that up a bit larger. So like right over here, let's see. Okay, here we go. This range in the market, this was a beautiful range in the ES&NQ where we'd come low, we'd go high. We'd reject the highs, we'd look for shorts. 9 times out of 10, those shorts played out. We went to the lows, we looked for longs, those played out. Watch the shorts, we moved lower, and look at the continuation. Easier range to trade, right? Then you look at something like gold here on the daily, and it's like it doesn't even have enough space to trend for a few days. It'll give us a couple days in one direction and then just massive drop. So got to be careful. We'll be rewatching, taking more notes. There you go, Beth. That's what I'm talking about. Yo, Beth is like taking the market in the morning boot camp right now. Absolutely love that. Gold repeats history only. You're absolutely right on that. Most markets usually do. That's what I like to look for on ES&NQ. Take a look here, man. Look at that. Boom, we're dropping lower, which means NASDAQ is also dropping lower. There goes those shorts. Hey, I appreciate that, man. I appreciate that. Yeah, I'm a teacher. I'm a leader by heart. Always have been, always will be. Love what I do, and I love being able to give you guys. Oh, yo, I got you. Trading concepts. Hit me up. Hit me up. I do host one-on-ones. I do have that. Hit me up on X. Trade with Kev is my Twitter. Trade with Kev. Can hit me up. Could also hit up on Instagram is Trading with Kev. If you could just go to my website too, tradingpioneers.net. That's me too. You could even look up my name. I could let's see if I get rid of this for a moment. Kevin Dubrisky. Just look up Kevin Dubrisky. All that's gonna pop up. But thank you, bro. I appreciate that, man. It's all about having confidence in yourself and repeatability. Thank you, man. I appreciate that. That means a lot. Definitely means a lot. Hey, Ryan. Ryan's one of the best students I got, man. He's a great guy. He's learning a lot, and he's a great example too of different strategies are for different people. I'm a big supply and demand trader. That's my core. But then I'll use things like volume profile, volume analysis to find that follow through, to have some confidence in my trades. Ryan likes moving averages, but maybe he was struggling with A, B, and C. Not going to go in depth on that, and it's never a call out. Remember, everybody's at their own pace in their journey. We worked some things out. We maybe looked at something called moving average clouds. So it shows you a more thick area instead of a specific price level on those moving averages. That gives you more confidence to take it from you. Yeah, absolutely. I got you guys. 100%, man. And what's great with one-on-ones too, and having that type of mentorship, even if you have confidence, whether you're a month into trading, 2 years into trading, 10 years into trading, is it's that extra sense of accountability that will keep you out of those BS trades, that will keep you out of chasing, oh, wow, we're moving lower. I can't believe I didn't take those shorts when Kevin told me to. I got to go short down here, and then I'll put a random stop loss over here, and then get wicked out, get frustrated, try to go long after it wicks you out, stops you out again. Meanwhile, the people that took the shorts from where that trade entry was, they're fine if we pull back a little bit. So confidence is key. Knowing when to not chase and having that extra accountability will keep you on the right side always, even if being on the right side means not taking a trade. Very cool, guys. That is awesome. That is awesome. Let's see. Let's hide that poll for a moment. And guys, if you're watching right now and you don't have MRKT, gotta get it, man. Get access to marketedge.ai. Use discount code KEV for 10% off. One of the best platforms out there. Look at this, man. NASDAQ with that continuation. Beautiful move. That is a 286-point target. Price stop loss was 50 points. Guys, people might look at NASDAQ and be like, a 50-point stop loss. That's wild. How can you trade that? You have to always remember perspective, perspective, perspective. If we're looking for a 270-point move, then a 50-point stop loss is reasonable. Yeah. Thank you, bro. Yeah, discipline is huge. Discipline is absolutely huge. I didn't take a trade yesterday. I didn't take one today. I saw this beautiful setup here, went against my bias, said I'm not taking it. Had I taken it, probably would have went lighter in size. It's also important to understand your sizing. 9 times out of 10, you should be taking every trade with the same amount of risk as you took on the last one, or else you're skewing with your risks or reward. But when market conditions start either working against you, things are a little more up in the air, you might not have as much confidence like you did before in that other trade, well then guess what? You can always size down, but maximize your stop loss. So you say, okay, the most I can lose is $150, $200. I'm sorry, minimize your stop loss. And then guess what? You can move on from there. You're on a prop account. Let's say you're on a Tradeify account, discount code Trading Pioneers, and you go, okay, I have a $2,000 drawdown. I'm not going to risk $500 a trade, or I'm going to blow this thing in 4 trades if I'm wrong. And not only that, psychology comes in. You can't forget psychology is such a big player in this industry. If you're in a trade and you know that if you lose this trade, you're going to freak out, you're going to blow the account, you're not going to be happy, you're too heavy in size. If you know when you take a trade, you have to almost prepare. You have to, not even almost, you have to be ready to take that loss. If you take a trade and you're ready to take the loss, you're not going to be frustrated. You're not going to be emotional. You're going to be disciplined, and you're going to be able to look at the market like it's a business. Trade like a business, not a hobby. Trading is not a hobby, guys. Once you start treating it like a business, that's when you'll start seeing consistency, build routine. Yeah, thank you, bro. Build routine and have that follow through. Thank you, bro. Yes, sir. We will create history. We definitely will. You guys already know. Let's see. Look at this, guys. NASDAQ's about to hit that full TP. We called that it was a 4.5 to 1, 4.6 to 1 risk to reward right here on Market in the Morning. That is phenomenal. Knowing that we are still overall bullish doesn't mean we can't have intraday moves to the downside. Bro, we're so close. Let's see. We're getting there. We're getting there. Let's get that drum roll. Oh, come on. That would have been great if it hit when I did the drum roll. That would have been really, really funny. Let's see. What is our VIX doing? VIX. I'm going to put that up on another chart over here so I don't take NASDAQ away from us. VIX is still pushing higher. Let's see. Take a look at our equities. One quick last look at the equities. Microsoft trying to hold VWAP. NVIDIA still trying to dump. SpaceX dumping at 108 a share. Bro, that just puts a smile on my face. The reason SpaceX dumping puts a smile on... Oh, wait, hold up. We got to get a sound effect going. Come on, NASDAQ. Close to that TP. So close. Bang. It's the take profit police. It's the take profit police. They hit it. Let's hit TP on ES. There you go, Robert. That's what I'm talking about. Brief thoughts on gold. Yeah, so gold, I just covered it about like 10, 15 minutes ago or so. Gold, same situation. Take a look. It was a 90 minutes, so different area of support. We ended up closing below it. We retested it, and we're rejecting lower now. So I'd want to see this short-term move on gold to the downside here to target 40.66. That target on XAU would be 40.08. It's a nice pullback level. So we'll take a look. Yo, $800, the trading concept. That's a W right there, man. Good job. Well done. Very good job, everybody. You guys are doing great today. Guys, let me know if you've taken any trades. Did you take that NASDAQ short that we called out, that 4.6 to 1? Really, if you tighten up the stop loss, even if you tighten it up a little bit, that's a 5 to 1 right there. So who we fooling? but clean trade, love to see it. And it was also, like we always say, we have Mel in here a lot of times. She uses moving average for her entry. That would have been a moving average trade right there. We get the 3 bars in our direction under the MA, right below our key level that I had. Things lined up. Nice confluence on that. I always mention, guys, confluence is key too. When you have confluence, you'll have confidence. Confluence is when you have multiple reasons to take a trade. It's broken my demand zone. It's below a VWAP. We're retesting a low volume shelf. We're doing A, B, and C. Maybe, yeah, that Trump headline that we had out earlier, we said might not have that big of an impact. Guess what? It seems like it is giving us a pullback. But remember, just because we were able to catch the small move to the downside, and small, of course, is going to be in reference to the bigger move. Look at the hourly time frame. This was our big move. This is still a pullback. But look at this. We're still dumping. We're still going. That is beautiful. Yeah, bro, you got it. Yeah, you took those shorts? Good job. Good job. W's in the chat. I'll throw, like No Lab says, man, I'll put my PayPal in there. You guys throw me a tip. We'll only take 5% of profits. But, that's awesome, guys. I'm very happy to see that. In my opinion, though, if you are in any shorts, this is the area I would look to take profit. If you're in, let's say, and this is where micros can come in and be so helpful. If you're in 8 micros on NASDAQ over here, you take 6 off and you move the last 2 to inside profit. So it's a no-lose trade on the last 2. So that, guess what? If we do continue lower, you could capitalize on the bigger move and you're still in the trade. Whereas if you're not, then yeah, you locked in those 6, you're only in 2. Or even if you lock in 7 and you leave just 1 micro runner, that way you're really locking it in. But you do want to be careful with doing something like that, especially after you hit such like a nice R to R trade, like a 5-to-1. You don't want to be greedy where you're like, oh, great, we just hit that 5-to-1. Well, you know what? I think it'll go down more. Now I want to target this level. And you don't get out of the trade, then price reverses on you, and you just let a 5-to-1 risks or reward winner turn into a loser. Then you're going to be upset with yourself. Then you're going to be like, what am I doing? Why did I do that? Why am I greedy? Greed will kill your account. Yeah, there you go, bro. Good stuff, man. Good job, guys. Well done. Well done. Let's see what's up. Ryan says, where is your 2-hour demand on NQ start? Well, it starts at the 2-hour time frame. I got to hold up. Oh, that's not. I thought that was the but-ums. It's not. I got to get that sound effect in here. But 2-hour, take a look. It starts at 28,150. Got it. Nice. Cool. Yeah, so 28,150. This was a very key area of resistance for the past few days now. So what happened? Markets made their way back to them and now trying to act as support. I marked canceled the wrong way. Got you. Mark the candle the wrong way. Got you, bro. Got you. Yeah. So supply demand, we want to find that open price to the low when we're looking for a demand zone, and vice versa for those supply areas. But look at that. NASDAQ still going. Now, guess what, guys? If you take a trade and you take a 5-to-1 risk or reward, you lock in profit, and markets continue anyways. You followed your rules, you followed your entry, and you took a killer trade. You don't know if we're going to reverse off your take profit. You have to have a reason behind why it's your take profit. Elsa, good morning. I got it right again. Good morning, Elsa. Good morning and welcome. You did miss a little bit of fun, but it seems like markets are continuing at the moment. It is 10:14 right now. Caught these beautiful shorts. Elsa, you're gonna have to let Mel know that she's influenced me enough to throw that 50 EMA on my chart, just to be aware of it. But really cool stuff. Nice move. We are moving lower. Also, you didn't take an 11-to-1 today? You've been killing it lately. Fantastic. Like crazy risks or reward on that. Really good stuff. Good job, guys. Good job. NASDAQ chopping around, still trying to drop. We take a look at our equities. Oh, that's what I like to see. Microsoft falling through VWAP. SpaceX keep dumping below 108. NVIDIA still moving lower. Look at the weakness on equities. Weakness on equities does help support NASDAQ to try to continue lower. But knowing NASDAQ's here, Yo, I'll see you there, brother. I'll see you there for sure. For sure. But really great stuff, guys. Absolutely love to see it. Smart moves, good moves, and it's all about confidence. It's all about discipline, and it's all about routine. Once you have these three locked in, you're going to be on a much smoother pace to consistency in your trading. Us lamos over here only got a 4-1. That's great. That's great. Listen, you know what? This is a great example of why you never compare yourself to the next person in trading. Elsa has been coming to markets day in, day out, day in, day out, day in, day out. She's learning from Mel, a great trader. And guess what? Her 7-1s, 11-1s, that's great. The trading concept, bro. I'll see you soon. Shoot me a DM. We'll talk in a little bit. I know you're sleeping now. You're probably somewhere. Let me know where you're from. But yeah, everybody, do not, back to what I was saying, do not compare yourself to the next person. A 3-1 risk to reward is still solid. Even a 2-1 is good. A 4-1 is good. It's all about the repeatability. Are you doing something that you can repeat every day in the market, or are you doing something that's just guesswork and sometimes it works out? From Australia, that's awesome. Yeah, we're getting a lot of Australia people in here, a lot of people from HTL in here. That's her trader lounge. I'm from New York, brother. New York, here in the big US of A, with Mr. Mayor Mamdani. Guys, run the like button up. I know viewership is usually low on Fridays. People are sleeping. People made their money Monday through Thursday. Call it a day. Not here at market in the morning. We're here Monday through Friday, 8:20 to 10:30. Lighten it up just like we always do. There you go. Repeatability is there. Be there soon. You got it, bro. You got it. 100%. 100%. You stay disciplined. You stay showing up. Listen, guys. Yeah, you got it for sure, bro. We'll set you up for sure. I got a nice plan for you. We'll package it up and we'll get you going on the right track. We're going to get you there in a month or two. 100%. 100%. You said you got good strategy, good system. That's a great place to work off of. If you're a trader that doesn't know where to start, doesn't know, sometimes I use moving averages, or what's crazy, what I see sometimes, guys, with newer traders, and I'm sure you guys have been there before too, they'll have VWAP on the chart, they'll have RSI on the chart, they'll have MACD on the chart, they'll just have so many, just like tons and tons of indicators, and it's like, why, for what? And they'll have like this on the chart and be like, oh, okay, this was a clear short because I had all these different reasons. I just had all these. Oh, look, we had all these different reasons. You can't even read your chart at that point. You can't even read your chart at that point. Why would you make a mess of your own chart? We do not do that. Does that mean RSI doesn't work? Does that mean MACD doesn't work? No, no, and no. But does it mean having too much on your chart is going to get confusing? Yes. You're not going to know what you should trade. And guess what? You might see, oh, my RSI tells me I should go long here. Okay, well, my MACD is telling me I should be short here. You don't want to have conflicting bias off of two different strategies or two different setups. You want to find something with the decency, right? And that's great. How was your trading today, Kevin? Listen, Elsa, I've been disciplined myself. I took a bit of a loss on Wednesday. Monday, Tuesday, we killed it. Bit of a loss on Wednesday, and I took Thursday slow. I took no trades. Friday, here we are, no trades as well. Do I wish I took this little 5-1 we call it out here? Absolutely. But we can't trade off of wishes. We can only trade off of strategy and consistency. And like we said before, repeatability. So what are we looking for next time? We're looking for that repeatability. We're looking for those same setups time and time again. Once you can, let's say a new trader asks you, what's your trading strategy? You have to be able to answer it like that. You need to know exactly what your strategy is, why you trade it, how you trade it, and everything else in between. If somebody asks you, what strategy do you use? And you're like, oh, well, sometimes I take fair value gaps, and sometimes I take moving averages, and then sometimes I trade the orb. There is no sometime in the market. There has to be, well, there is sometimes in the market, but there should be no sometimes in your system. Your system has to be disciplined, right? That's where discipline falls in line. If you're disciplined, you'll have follow through. If you are disciplined, you'll see results. Routine equals results. No routine, no consistent results. I find Fridays hard, to be honest. PA has been a pain all Thursday, end of Asia till now. Yeah, you're right. It's been a lot more choppy today. Been up and down through your moving average. I like moving averages along with VWAP. That's a nice little confirmation, dual confirmation right there. I like the demand zone and NQ, volume point of control, previous day high, and demand all right there too. Nice. What are you looking at? Previous day's point of control, like from an anchored volume profile standpoint? So like from here to here. Yeah, look at that. Great call. Look at that. We created a demand zone with previous day's point of control level. So this was a great key level right there. That could have also lined up to give you confidence on this price target, right? That previous day's point of control is a nice price target to use the next day. So great job, Ryan. W's in the chat for Ryan right there. That is nice. Good job. Well done, man. That's what I'm talking about, bro. That's what I'm talking about. You gain that discipline. You come take some sessions with me, sessions with whoever. You learn. You come back every day. You repeat the same setups. You gain confidence. And the reason you want to have the same setups too and have the same routine is because the more screen time you have, the more you're following that same routine, the more reps you're going to get in. The more reps you get in, the more you see that it works. Guess what? The more confidence you'll have in your trading. You didn't get a round of applause. Elsa, I'm pretty sure every time you type something, it should like automatically applause. But there it is. I just gave you one right there. You guys are doing great. In fact, you know what? We'll take it one step higher. We'll give you a gunshot. We'll shoot in the air. Boom. Boom. Or a gong. We have a gong. For sure. Absolutely. Big shout out to Ryan there. That's awesome. That is great. Let's see. Histogram box. We could get rid of that. We don't need that. 11-1. Yeah, Ryan, you got that 11-1. Oh, hands still tired from your 11-1 yesterday, right? Man, 11-1. Look at this, guys. This is why we don't be greedy. Imagine saying, "Oh, now I got to target this next level. I want a 7-1. I want more." You would have went from a 5-1 locked in to now I'm at a 3-1. Now imagine that. Imagine you told yourself, I want more on this trade, and then markets pulled against you and you just lost 2R worth of profit. Then comes the question, oh shit, do I close out here to lock this in now? Do I wait and try to get out at my original exit again, which might not even happen anymore at this point? Do I move my stop loss to over here? Then you're flustered and you're like, oh my God, I don't know what to do. Why wouldn't I do that? I was greedy. And because I was greedy, markets know that, and markets will say, thanks for being greedy. I'll see you later. This was a great area. I was actually originally off the New York session open, even before in our pre-market around 9 o'clock over here, I was looking to see price reverse off 28,150. That's what it's trying to do right now. So I do think we're going to move higher. I want NQ to go all the way to previous day low. Yo, you want NQ to previous day low? Yeah, we're going to shoot for a nice 20-1 risk to reward today. That's about Mel and Elsa standards right there. No. We're not getting that. Remember, context is key. We had a key level over here. We had our demand area over here. We had a nice strong move, and we still do have that bullish. Oh, cool, because it's bullish overbought now. This is cool, man. I like this update that Nalab did. Price climbed hard and fast, so pullback is likely. Don't chase new longs here. That's cool, bro. That's really cool. Where is it going? Well, I think we found our low for the day. I do. If we do make a new low of day, then obviously I'm wrong and we can continue. But this is a pretty strong standpoint. Now comes the question of, is the optimism from Microsoft and what was it? Microsoft and Amazon. Is the optimism from Microsoft and Amazon enough to give us follow through? Or Was it enough to give us a rally? And then we're going to go right back to where we started. Now, a little insight, Mr. Jim Cramer. Now, if you guys don't know who Cramer is, Cramer does, what's the show? What's the show that I don't even know. Oh my God, what I'm drawing? Fast Money. He has a show called Fast Money on CNBC. He's been around for years on years on years. He was a hedge fund guy. Then he started doing the show. He is notorious for something called inverse Cramer. I'll show you guys what he looks like right now. Jim Cramer. This is him. I'm sure you guys have seen him. If you look up Jim Cramer, inverse Cramer, there's a full inverse Cramer ETF. Inverse ETF. Look at that. Inverse ETF. By Tuttle Capital, I believe. Yeah, there it is. Launched by Tuttle Capital. I've met Tuttle a couple times. He's a cool dude. Somebody that I used to trade with in my old community. His name is Jeremy. He trades with him now as well. But the inverse of that is SGIM. Yeah, right? There's a full inverse Cramer ETF, SGIM. Let's take a look at it on the charts and see how it's performing. SGIM. That should be. Thought that was it. Switch to daily. SJIM. Maybe it's a different ticker. Obviously, it's a different ticker. My friend Angie got a 1 to almost 10 in this drop. She's a legend. That is beautiful. Great job. Saif, man, thank you. Thank you for the birthday wishes every day. I really do appreciate it. One day, you're going to be right. And that day is going to be in April. So keep at it, and we're going to get back there. That's great. That is great. Guys, it's always fun having you guys in here. Let me know if anybody took that short on NASDAQ. That was a beautiful short trade. Are we done here? Are we continuing? We don't know. When we don't know, we leave markets alone. When your edge isn't there, you leave markets alone. If you're using a moving average trade and you wait for us to close below the MA, that would be this entry over here. That wouldn't be this entry down here. You'd be looking for another trade setup. But yeah, real interesting, that whole Jim Cramer thing. Dude, I want to find that ticker. It's got to be a ticker. SGIM. US. SGIM. Yeah, it's weird, man. I don't know. Let's see, Kevin. Hey, Kev, what do you think about JMKE? Oh, Jersey Mike's? We could take a look at Jersey Mike's. JMKE, Jersey Mike's. Bro, I think they're pretty good. I got one around the corner. They're delicious. They IPO'd today. They came out at $21. They're at $21.63 right now. What I think about it is they got great sandwiches, and I would want to ask market, what does it think about? What do give me a breakdown on Jersey Mike's. Give me a breakdown on Jersey Mike's because it had an IPO today. Give me a breakdown on Jersey Mike's because it had an IPO today. Let's see. Jersey Mike's isn't a publicly traded company that market tracks. It's a private sandwich company. I don't see an IPO filing. All right, so we got to thumbs down that and send that to our homies in the back end. Oh no, but then it does have it. The debut was rough. Shares open $21, down 8%. What do you mean down 8%? Closed first day. It didn't close the first day yet. So we're gonna fix that. Inaccurate. Why? First, it said it isn't public. It is starting today. Then it said the debut was rough. And it closed at $21.63, which again, it did not close today yet. Which it hasn't closed yet. What else? Anything else in here? Okay, no, nothing crazy. So we'll send that through. They'll fix that. Following retrace up. Let's take a look. NQ. But yeah, Jersey Mike, because it just IPO'd, I'd need to see more about it. I'd also want to know, you know, what did Market give us? Did Ask Market give us its, let's see, private IPO, raises 1 billion, debut. What's its market cap? What's the ticker? J Mike. JMKE. Jersey Mike's what's it called? Market cap. Guys, don't forget, man, run that like button up. We got to hit 50 today, or no streams next week. I'm just kidding. Market doesn't have data. Okay. IPO, so likely 6.2 to 6.5 billion dollar range. Let's see. Okay, then let's compare it to something. What's Chipotle's market cap? Now listen, Chipotle, in my opinion, a much larger food industry than Jersey Mike's. So Chipotle's 48 billion. So doing laps around Jersey Mike's. We could see, something to do some research into, and we'll take a look. NASDAQ. Ooh, look at that reversal. Look at that. I said buys off of demand, and it is holding off demand. That's nice, man. Again, another trade that I did not take myself. If you took it, your stops are at the low of day. You're looking to see price trade right back to VWAP, right to that range. And all you're doing is you're range flipping NASDAQ there. Real clean. Real clean. Awesome, guys. Guys, it is 10:30. We are going to be wrapping up market in the morning. I appreciate you all for being here. Phenomenal stream. Great call out on those NASDAQ shorts. And guess what? It wasn't only the NASDAQ short over here. It was the supply zone we tested over here that we rejected. Imagine catching those shorts on NQ up here all the way back down to that demand. There's your 9-to-1. It's no 11-to-1, but that's all right, man. Listen, again, like I said, never compare. 4-to-1 is great. 3-to-1 is great. 5-to-1 is great. As long as you're not really going for those 1-to-1s, and as long as you're not going for them at least too often, you should be on the right side of the trend. Should be good in the markets. Guys, have a great rest of your day. Make sure you smash that like button. It is always a pleasure being here with you guys. You guys are a great audience. If you haven't already, like and subscribe. Join us here every single day. I will see you all on Monday. Have a great day, everybody. Have a great weekend. If you don't already follow us on Instagram, follow marketai.insights on Instagram. Follow Trading with Kev on Instagram. Follow market_AI on Twitter. And I will see you guys all on Monday. Take care, everybody. Peace out.